Did you wake up this morning wondering if your Social Security check just got bigger, or if new rules might be affecting your retirement benefits right now? Well, you're not alone. And if you're one of the millions of Americans who depend on Social Security, today's video could literally put more money in your pocket or help you avoid costly mistakes that could reduce your benefits. August 1st, 2025 has ushered in some of the most significant Social Security changes we've seen in decades, and I'm about to break down exactly what these new rules mean for your financial future. Before we dive into these game-changing updates, make sure you hit that subscribe button and ring the notification bell because Social Security rules are constantly evolving, and I'll be here to guide you through every important change that affects your retirement security. Trust me, you don't want to miss any of these updates because they could mean the difference between maximizing your benefits and leaving thousands of dollars on the table. The biggest story making headlines today is the full implementation of the Social Security Fairness Act, which has now completely eliminated two provisions that have been reducing benefits for millions of Americans for decades. If you're a teacher, firefighter, police officer, or any other public employee who also worked in jobs covered by Social Security, this change could dramatically increase your monthly payments. The windfall elimination provision and the government pension offset, commonly known as WEP and GPO, are now officially history as of this month. But what does this actually mean for your wallet? And how do you know if you're one of the beneficiaries who will see these increases? Let's start with understanding exactly what these eliminated provisions were doing to people's benefits. The windfall elimination provision was reducing Social Security benefits for individuals who received pensions from employment where Social Security taxes weren't withheld, such as certain government jobs, teaching positions, or work covered by the railroad retirement system. Meanwhile, the government pension offset was reducing spousal and survivor benefits for people who received their own government pensions. These reductions were often substantial, sometimes cutting benefits by hundreds of dollars per month, which created genuine financial hardship for retirees who had worked multiple careers and contributed to Social Security through private sector employment. The elimination of these provisions means that affected individuals will now receive their full calculated Social Security benefits without these arbitrary reductions. But here's where it gets really exciting for many of you watching. The Social Security Administration has been working since February to not only adjust current monthly payments upward, but they're also calculating and distributing retroactive lump sum payments dating back to January 2024. This means if you were affected by WEP or GPO, you could be receiving a substantial back payment covering more than a year's worth of benefit increases. How do you know if you're eligible for these increased payments and retroactive benefits? First, you need to have been receiving a pension from employment that wasn't covered by Social Security, such as work for a state or local government, certain federal employment, or teaching in states with their own retirement systems. Second, you also need to be eligible for Social Security benefits based on other employment where you did pay Social Security taxes. If both of these conditions apply to you, the Social Security Administration should automatically recalculate your benefits and send you a notice explaining your new payment amount along with any retroactive payment you're owed. But the Social Security Fairness Act isn't the only major change taking effect this month. Have you been keeping track of the annual adjustment to the earnings test limits? These limits determine how much you can earn from work while receiving Social Security benefits before your payments are reduced. For 2025, if you haven't reached your full retirement age, you can now earn up to $23,400 without having any Social Security benefits withheld. This represents an increase from the previous year's limit of $22,320, giving working retirees more flexibility to supplement their income without penalty. The earnings test becomes even more generous once you reach the year you'll turn your full retirement age. In that case, you can earn up to $62,160 before any benefits are reduced, and the reduction is more favorable at just $1 withheld for every $3 earned above the limit, compared to the harsher 1-for-2 reduction that applies to younger beneficiaries. Are you planning to continue working past your full retirement age? Once you reach your full retirement age, these earnings limits disappear entirely, meaning you can earn unlimited income from work without any reduction to your Social Security benefits. Let's talk about another crucial update that's affecting payment schedules this month. Due to the Labor Day holiday falling on September 1st, 2025, the Social Security Administration has shifted some payment dates to ensure beneficiaries receive their money on time. If you normally receive your Social Security payment on the 3rd of the month, your August payment was actually delivered on August 1st instead of August 3rd. Similarly, Supplemental Security income recipients who would normally receive their payment on September 1st will get their money early in August to avoid the holiday delay. These schedule changes might seem minor, but they're actually quite important for budget planning. Are you someone who has automatic bill payments scheduled around your normal Social Security payment date? You'll want to check your account and make sure these timing shifts don't cause any issues with your monthly financial management. The Social Security Administration makes these adjustments to ensure beneficiaries aren't left waiting for their payments due to federal holidays, but it does require some attention to your cash flow planning. Now, let's address something that's been causing concern among many Social Security recipients: the long-term financial health of the Social Security system itself. Recent projections indicate that the program's costs are exceeding its income, and this trend is expected to continue throughout the 75-year projection period. The trust fund reserves that have been supporting the program are being drawn down, and without congressional action, there could be automatic benefit reductions in the future. However, it's crucial to understand that this doesn't mean Social Security is going bankrupt or disappearing entirely. What these projections actually mean is that if no changes are made to the system, future beneficiaries might receive approximately 77% of their currently scheduled benefits starting around 2033. While this would certainly represent a significant reduction, it's far from the complete elimination of Social Security that some fear-mongering headlines might suggest. The question isn't whether Social Security will exist, but rather what changes Congress might implement to ensure the program's long-term sustainability while maintaining adequate benefit levels for current and future retirees. Are you wondering what you can do to protect yourself against potential future changes to Social Security? The most important step is to maximize your benefits under the current rules while they're still in effect. This means understanding your full retirement age, considering the impact of delayed retirement credits if you can afford to wait past your full retirement age, and ensuring your earnings record is accurate so you're receiving the highest possible benefit calculation. Speaking of benefit calculations, have you checked your Social Security statement recently? This document, available through your My Social Security account online, shows your complete earnings history and provides estimates of your future benefits under different claiming scenarios. With all the recent changes to Social Security rules, it's more important than ever to verify that your earnings record is accurate and complete. Any errors in your work history could reduce your benefit calculation, potentially costing you significant money over the course of your retirement. The elimination of the windfall elimination provision and government pension offset also means that benefit calculators and planning tools that were previously available may need updating. If you've been using online calculators or working with financial advisors to plan your Social Security claiming strategy, make sure they're accounting for these recent changes. The old rules that reduced benefits for certain public employees are no longer applicable, which could significantly change the optimal claiming strategy for affected individuals. For those of you who are married or widowed, the elimination of the government pension offset is particularly significant. This provision was reducing spousal and survivor benefits for people who received their own government pensions, often leaving surviving spouses with unexpectedly low Social Security benefits. With GPO now eliminated, surviving spouses who receive government pensions will be able to collect their full Social Security survivor benefits, providing much-needed financial security during an already difficult time. But what if you're not currently receiving Social Security benefits but expect to be affected by these changes in the future? The elimination of WEP and GPO applies to all future beneficiaries as well, meaning you can now plan your retirement with the confidence that your Social Security benefits won't be arbitrarily reduced due to your government employment or teaching career. This change makes Social Security a more reliable pillar of retirement security for millions of public employees who previously faced benefit reductions despite paying into the system through other employment. The timing of these changes also coincides with the annual cost of living adjustment that took effect earlier this year. Combined with the elimination of WEP and GPO, many affected beneficiaries are seeing substantial increases in their monthly Social Security payments. Are you keeping track of how these various changes are affecting your total retirement income? It's worth reviewing your entire financial picture to see how increased Social Security benefits might allow you to adjust other aspects of your retirement planning. One aspect of these changes that deserves special attention is the tax implications of increased Social Security benefits. If your total income, including Social Security, exceeds certain thresholds, you may owe federal income tax on a portion of your benefits. With the recent increases from eliminated WEP and GPO reductions, plus any retroactive lump sum payments, Some beneficiaries might find themselves in a higher tax bracket or owing taxes on Social Security benefits for the first time. Have you consulted with a tax professional about how these benefit increases might affect your overall tax situation? The Social Security Administration has been working diligently to implement these changes as quickly as possible. But the magnitude of recalculating benefits for millions of Americans is enormous. If you believe you should be receiving increased benefits due to the elimination of WEP or GPO but haven't seen changes in your payments yet, don't panic. The agency is processing these adjustments systematically, and they've committed to ensuring that everyone receives their proper benefits along with any retroactive payments they're owed. For those receiving the retroactive lump sum payments, it's worth considering how best to use this unexpected windfall. While it might be tempting to view this as found money for discretionary spending, remember that these are benefits you were always entitled to but were incorrectly reduced. Consider whether this money might be better used to shore up your emergency fund, pay down high-interest debt, or even increase your retirement savings if you're still working. As we wrap up today's comprehensive overview of the August 1st Social Security updates, remember that these changes represent some of the most significant improvements to Social Security benefits in recent memory. The elimination of the windfall elimination provision and government pension offset corrects long-standing inequities that unfairly penalized public employees and educators who also worked in Social Security-covered employment. Combined with the updated earnings test limits and adjusted payment schedules, these changes demonstrate that Social Security continues to evolve to better serve the needs of American retirees. Whether you're currently receiving benefits or planning for future retirement, staying informed about Social Security changes is crucial for maximizing your financial security. These rules and regulations can be complex, but understanding them can literally add thousands of dollars to your lifetime benefits. Make sure you're taking advantage of all the benefits you've earned through your years of work and contributions to the Social Security system.